Here is the analysis on the stock market. We're going to look at the short-term analysis. We've been doing that the last couple of weeks, plainly because the information on the intermediate analysis has been challenging. Where a correction was likely to come, we saw corrections come basically under the market, with many of the indexes pulling back significantly. The Dow Jones Transportation Average, the Russell, all getting like 13%, 10%, and some other parts of the market correcting pretty significantly, but the major indexes not showing that. One of the important things when I talk to traders, that especially when they're having challenges, and this is real important for shorter term traders especially, when you're struggling with your analysis, when you are looking at time frames that are giving you ambiguous information, that you don't really know how to handle positions, one of the things that I encourage them to do is to shorten their time frames. The reason for that is because the information they'll get will come to them faster, and that tends to get them more in tune with the market. And the same thing when you do analysis. If you're struggling with your analysis, go to shorter time frames. Really work on those first and see how you could expand that information out. So in the short-term views that we have brought, the stock market has been in an uptrend, and the information's been spectacular. As a matter of fact, if you look at the stock index report that Matt puts out daily and weekly, those have been giving just great up signals of bullishness for actually months. So that has not changed yet. I'm going to bring in this short-term look here. I'm going to move that chart out of the way right there, and then bring in SPX on the daily. Let's blow that up. And you can see the cyclical patterns in here. Remember, if you want to learn cycle analysis, go to our workshop page, which you'll see in the upper navigation on the site, and you can watch a video I put up there. So here is the analysis that we have been showing, and these are called complex cycle structures. On here is the slim ribbon, which shows you the momentum conditions, and the slim ribbon PO, which is a reflection of that and gives you the indications in here of continuation of momentum conditions. That you can use those as buys right over here, and when it's red, you could use it as sells. It essentially is giving you confirmation of the condition of the market. You can see right over here, we just got a little bullish confirmation right there. But the market is actually a little bit weaker. Usually when you get those, it just spikes up. But now you're not really getting that. We're in another one of these yellow zones right over here. Now, we had believed that this period right in here would coincide with a decline on the intermediate, and it would be sharp to the downside. Then when the magnitude of this advance showed up just as all of these has right in here, or have, that would be giving us an indication that this corrective phase is likely to come down into the support areas again and hold. So far that is proving to be the case, as you can see, as the shape of this cycle continues to be what we considered configured bullishly and translated bullishly. Though you can learn about that in our glossary in our cycle analysis workshop. So the key levels that we're looking at in here are where the support is in those green zones right there, and the bottom of that right over here is 44.35. So it's 44.35, 44.58, and where we got to this morning, 44.77. And then it got a bounce off of there. So this is about, because these cycles are averaging 20 days, this one is actually 23 days. And one thing that is really strange to me, or maybe not so strange, is that all of a sudden, everywhere I look, people are looking at market cycles, and they are all picking up on the fact, maybe from us, maybe on their own, that these cycle lengths have been in this 20-day average, as you can see right in there. And what happens is that when cycles become so consistent that it's practically written out of the textbook, they start to change. I think all of these people that are focused right now on these cycles are not going to know what to do when they change, because they won't understand shifting conditions, and we'll be bringing that to you when it happens. In the meantime, this looks like it has maybe 4 to 6 more days right in here of correction if it were to remain in the ideal lengths in here. Let's just say 3 to 6 more days would be kind of in the ideal lengths, and that would get you down into this support. Underneath the 78.6% at 44.05 would be the first warning that something may be changing. That would not be a bearish, it would be what we call a reevaluation level. While these are all bullish and setting up the same way, if it got under there, the expectation of a new high following would be sharply diminished. It would probably go from 70% or more down to about 40 or 45%. If it got under this level right over here, 43.6773, it would signal the likelihood that the intermediate pattern is turning negative and some very significant top in place. Now, if you get a low in here and it moves up again, all of these numbers are going to get reestablished. The key is where the real cycle lows are that you could see right in there, and these cycles were so strong because of the upward directional components that the magnitude of advance pushed each one far away from the levels that would be threatening. It did it again in this cycle right over here, and that is suggestive of the fact that this uptrend is not over. Now, if you were to come down in here, get support, rally, not make a new high, come down and break this low, that would be a very negative occurrence out in this next cycle. So we learn from the shorter term time frames about the intermediate conditions. While I had been anticipating a larger correction in the stock market, this short-term patterns have never, through all of these months, confirmed that. They have remained in these positive formations, as you see here, and all of those have continued to signal that the market would be making new highs. We still have that condition in place until the market tells you something differently. Right now, we would be looking for the next few days to get into these green zones that I told you about, and then we will be building a new structure pointing to a new high. If it falls harder, we'll be building the structure in a more negative way. If it breaks this low, we'll be projecting a negative pattern coming up ahead, and we'll just be learning from it. And I challenge the other people out there that are becoming psychoanalysts to really understand what all of these nuances are, all of these different formations, all of putting in key levels, key indicators that give you a sense of momentum conditions and the directional components that affects the cycle analysis. Right now, well, last week we talked about the fact that the market would likely decline and it would move down into these support levels. Now we're talking about it moving down into mid to late next week and then moving up again. We're going to have to see the depth of the decline and see if this positive structure and positive momentum conditions remain, as you can see on the slim ribbon and the slim ribbon PO and the configurations shown right over here. Stock market correcting a little, 4 down days in a row, and now maybe 5 is something we have not seen. We have not seen 6 down days in a row in I don't think in this whole year or even back into last year. So if that happened, maybe you'd get a sense of something is changing in here. So that's the S&P 500 down into mid or late next week, and then likely moving again. And let's see what the levels and indicators tell us at that time. That is market week for today. I hope you have found the information absolutely crazy compelling to you and that you've learned a ton from us. Remember, if you're struggling and challenged, shorten your time frames. I think that's the best thing I can give you for the day, as that will get you to tune into the market, and you will get out of your positions faster when they're not looking correct, and you'll find that, and you'll understand that your positions do look right even faster. Also, that will improve your risk reward and your returns. All of that, I think, is maybe one of the best things I can give you today.